Welcome everyone to the Kendall Report. This is the final report for this week, folks. Unbelievable. It is Thursday night prior to Friday, and guess what? Tomorrow is the last trading day of July. And if you remember when we started off this month, the thing I was talking about is that Q3 will have a rebound and we'll see some upward prices. And boy, are we starting to see that. We're finally getting some traction. You'll see when I go through the database tonight that we're getting more traction, and I'll discuss what I'm expecting for Friday night's intermediate run as well. So, good news. We're not in a recession. This is what Joe Biden told us, Janet Yellen told us, everybody in the administration. I've been doing this for working on 43 years in September. And I can tell you, it's the first time I've seen any administration deny the realities of what's going on within the economy. Now, I've also been operating, I guess, inappropriately on the premise that 2 negative quarters is a recession. I didn't know it wasn't. I'm so sorry. I mean, I've been talking about the last 6 weeks. We're already in recession. The numbers would say I was right, but evidently that's not the case. I found out we're in transition. We're transitioning, and I thought that's an interesting way to spin everything. Folks. We're transitioning to Sri Lanka, I think. We want to be green. We want all this stuff. This is the agenda that was put in place with fossil fuels. Everything we're seeing now is in front of us. And we're seeing the effects, finally. We're seeing that the economy is starting to implode. So I'll tie all this together in a minute, but I just want to make sure we're not in a recession. We're transitioning, and that 2 consecutive GDP negative quarters is not a recession. That's not what it is. I wonder what they say if we get 3. Wonder if that's one. We'll have to see, I guess. I think that the economy is going to continue to slow. I talked to you about this a lot. We're going to see the markets from the standpoint of, I think, the configuration of the economy. Let's separate this, that the market and the economy are not the same thing, right? So that's why we're seeing this bid that's come into the market. And of course, I'll discuss the earnings and things that came out after the close today. But we're really looking at a substantial amount of change coming in. We're seeing that the economy is slowing down. We're seeing real estate getting hammered. We're seeing a lot of things changing very quickly in front of us, and this will continue. This is far from over. And the whole premise and what the market was rallying on today, after having some negative numbers, we basically traded down to S1. I thought we might see maybe an R2. Well, we printed by the close, we printed RXT. We've done that 2 days in a row. We had an RXT sell signal. It would look like we were going to just drift sideways, and that looked like what was going on, right? All of a sudden, everybody started thinking and said, wait a minute, maybe the Fed doesn't have to be as aggressive. So that became the dialogue and the main theme that was running in the background, changing market sentiment. And that's probably going to continue. I could show you a lot of charts tonight that are telling us that this market is at the beginning phase of this rally, not at the end. I know folks are telling me all the time, there's somebody that writes this big long commentary and it's a bear market rally. Good luck with that. It is a bear market rally, but it's going to go a lot further than you think. And this is the configuration that we're seeing. This is what I've been seeing. This is why one of our big ETF strategies that are used by investment advisors went long 100% on Monday. In fact, we went long emerging markets. Well, the Dow's rolling. There's so much I could do tonight. I'm not going to go to as much depth as I could. I want to get this just set up for Friday and the end of the week and the end of the month, right? And so we'll kind of stick to the deal here. So I think I've established, that we're in transition, not a recession, even though technically maybe we're in recession. Probably the funniest thing I've seen in my entire career. I've been through multiple, obviously 43 years, you figure it out. Okay, so let's talk about Apple. Came out with earnings still up around 3% last time I looked. We're looking at Amazon is up 14+%. So that's a big number. That's a pretty decent sized company. But we got a bunch of mix. Just kind of stay on this earnings for a second here. We got, Intel missed. We got Meta. Black & Decker just got hammered. So the only thing that anyone cared about was Amazon and Apple, and that bid the market. In fact, we traded as high just right after those numbers came out to 41.11. And you may recall I was talking about some 40.70 to 41 handle numbers. I'll go through that when we get into the technicals here shortly, but there's definitely, we're coming into the first resistance level. And as always, these things happen very quickly in this market. And we'll see if there's any kind of window dressing or anything that's going to happen ahead of earnings. And I just want to stay on the earnings theme for a minute. Is what we're really seeing here is this earnings, we're just kicking off, right? This is the beginnings. We have weeks of this stuff. We have hundreds and hundreds and thousands of earnings reports to come out. And I think what has happened, what was built in was it was easy to beat. And I've talked about this before, is that the analysts are so bad, but everybody was undershooting where they really were going to be. And that's why these earnings are doing this. This happens, for 40 years this has been happening. This is the way it always works. And the markets typically rally on earnings. We saw, once again, Jay Powell come out and talk, and the market rallies. I went through that scenario the other night, and they're going to keep these markets rolling. We're up 27 handles, 4,100 right now on the S&P as we're talking here. So let's talk about a couple things. Tomorrow, we got PCE coming out, right? That's expected 0.5 up, 0.6. Is there a surprise there? Maybe that sets maybe a short-term high. We'll have to see what these numbers look like, but I don't think I think it's going to get shrugged off, and maybe it comes in as expected and it's built in, and no one's really going to respond to that. I'm just looking at my notes here and making sure I've covered everything in the front section we have. Yeah, that's pretty much it. This is the way this month is going to go out. Looks like near the highs of the month. Maybe it makes a new high tomorrow. I'll go through the technicals and show you what my expectations are. But this is, folks, the beginning of this quarterly rally, not the end. So don't be confused. I've told everybody in the live room yesterday to be very careful about trying to get too negative. And today there was no shorting this market. You tried to get short, they were going to just take your money on an intraday basis. So you just had to, and it was hard to play after initial rally. Once we were trading, 40, 70 plus, it was pretty tough to even get long in there intraday. You just were questioning. So it was one of those days where you watch the algos trade and do what they did. And then, of course, the earnings came out. We all hung out together after the close, and we saw this craziness that came in after the Apple and the Amazon earnings. First, it was Amazon, and I think Apple was delayed for 30 minutes. So it was an interesting day. So let's go ahead and take a look at the database, talk about the setup as we come in to the end of the week, into the month, and what's likely to happen as we come into Monday. So here we are, folks. 79.28. That's up about 1%. We had 642 buy signals, 144 sell signals. So we still had positive rotation. So we're at 79. I was talking about 72, 78. This is pretty extreme. It's possible that we could continue to climb. I've seen the database get up to about 90%. And the probabilities of that are fairly low, but we could still see in the 80 percentile range from that standpoint. So let me just talk a little bit about the expectations for Friday. And the folks you're in the live room, you heard this earlier, and I mentioned this last night, but I think we're going to see a giant tranche of buying across the board. and there's going to be major cap stocks coming into play. We haven't seen anything like this. It's probably been the better part of the year since we've seen anything like this. The strategy that I mentioned just a minute ago that went long had been 100% in cash since December 17th of last year. It had no downside this year. In fact, because short end rates were increasing, it actually made some money as far as just earning interest on the cash. So the point is that we now are seeing a lot of these things start to flow in, and it's just not, this is, like I said, I'll probably get stuck on this theme, but it's the beginning, not the end, because what we're going to see, if I'm right, and maybe I'll put something on Twitter for sure on Sunday night when we hang out, I'll go through this, but if we see a giant tranche of buying on intermediate models, this is the difference. Like right now, I'm looking at the breakdown of the markets where only average days duration right now is 13 days in the short-term database. The average holding is around 40. So we still have these are trading days. So we still have another 30 days. That's a month and a half and basic duration in the short-term database. So what that means is we could even get a rotation where it backs off a little bit. This is a scenario where we're at 79%. Maybe it drops back to 68, 66. Maybe we get some grinding. That's not the nature of the market right now, especially with all the charts that I'm going to show you here in a few minutes on a weekly basis, because that's where you need to focus right now. Not on the short term, not this rally that we've seen, but on the next level of the trends that are going to evolve from here. And I will be validated if we get, we're at, I think on the database, let me flop that over here just for a second. On the weekly, we're at 15%, 15.18% bullish right now. That number is going to probably jump, I'm guessing, at least somewhere in the mid-20s. There could be something even bigger because all of these stocks out there have been consolidating, setting up these bottoming patterns for the last month. So the fact that the indices traded lower, what we're seeing is once we start to establish these patterns, we're just seeing this continuation of a lot of patterns. Listen, this is very unique, and I've talked about this for decades now. This software was built. This is an old piece of software. I don't have Portfolio Expert up here, but this is our legacy software. This was built 22 years ago. So I've been watching this database through all of these ups and downs over the years, including 08, 09, all of that. When we see this thing come back on, it could be a relentless buying. I'm not really expecting that we've hit a major low, but that may be the evolution. In the live stream I did yesterday, midday, I discussed some of the things that we have to do when we're trading the markets, when we're participating with the markets, as we need to trade what we can see going forward. It doesn't matter what I think is going to happen in 6 months or a year. What matters is what's going to happen in the next 4 to 6 weeks, maybe the next 12 weeks, and we start to look out that distance. That's what's tradable. And so that's what's going to happen with the database. If I'm correct, we see this thing move up 22 to 28%. It could be a monster. I've seen runs come out, and this will be out. Those of you that have Wavetech, you'll be able to see this early. The run finishes, I believe, around 9 o'clock Eastern time. So that could be the party. Sometimes I've done some spaces, Twitter spaces, and to talk about stuff. I'm not sure what I'm going to have time. I've got a crazy schedule for the next week, so I don't have a lot of extra time. But just know that we're going to see something pretty large, and that's going to be the beginning of the database rotation. Now, whether we ever get over 42%, which is a key number that I talk to you folks about all the time, did we get to that material level? At that point, if we do go above 42%, typically what that means is that we have intermediate traction to enough that we have a sustainable rally. I'm not in a camp that we're going straight to new highs, but I remember kind of snickering to myself, just going on for a minute here, snickering to myself that these people that were talking about we're going to rally back and make a new high by year end. That I thought that was funny. I don't even think like that. I think about where we are in the patterns and all that. As you know, I've been talking about before we came into the month of July that we were going to see a rally. We have the first part of this rally. Now, if we start to get these tranches of intermediates orders coming in, this is going to be the next level. I know I've kind of stuck in a circle here, but I just want you to understand what's going on with the database. It's one thing to draw a trend line on an S&P or some index and tell people you know what's going on. It's another thing to be able to monitor right now 16,117 symbols and look at what's going on in a rotation and knowing these numbers like I do. I don't know. Maybe there's somebody else that has this ability, but I don't know of them. I actually don't know of anyone that's even built platforms like I have. But the point is that we're likely to see this material traction, and this is the beginning. So let's go on and take a look at the S&P. So this is the short term that we're looking at. This is the daily. And I'm going to tell you, if you look at all the daily charts, I talked about this. We got a buy at, we got this buy the other day. We're 39.47 buy. I actually have, and so we're still looking at, there was another buy on a different model at 38.80. So here we are trading 4,100, up 27 handles, up 0.66. After yesterday, the S&P was up 1.21, Nasdaq up 1.08, and Russel up 1.34. That was after the crazy day that we had before that, right? We had Nasdaq up 4 and change, and S&P up 260, I believe. I'm going off memory. But this is, so if you look at it from this standpoint, you're going to argue that, hey, maybe this is the end of this sequence. And one of the things that I had talked about quite a bit from the standpoint of what's going on with these patterns. Yeah. So, but what, you know, just so you know, when you're looking at these patterns, you have to walk forward your investments, you know, and just so you know, I don't even know what that term investor means. I never have. So I was talking about the trends that evolve, and that's what you get to trade. If you think you can see out further than that, it's just a guess. It's a dartboard. But you walk forward and you get confirmations as you go forward in your analysis. So you walk forward the analysis. We talked a lot about that in the live room. So let's. So we're starting to see this is something that happened. We're still seeing PPM 1 starting to turn down here. The PPM 2 is accelerating. We're at 0.38, which is anything over 0.25 is a trend. So we can continue to expect that this trend will go up. The key averages and so forth in this pattern is the 10-period moving average. PPM 1 is up 0.6 right now. We just traded a little bit over the 41 handle. So we're looking at 39.79 is major support, and we're just going to continue to climb this zone here from that standpoint. And really, if we just look at the market grid for today, overnight and today, I want you to look at the RXT 4164, R2 is 4119 and R1 4095 here. So we're already trading right now. We've traded 4105 And so we're trading toward R2. I don't think we're going to get these crazy volatility numbers because the volatility's kicked up in the last 3 sessions. So now all of a sudden, if you look at the market grid as a whole, you're looking at 3982 to 4164. That's a big expectation range, almost 200 points. So that's what happens when we kick up volatility, and you'll see this volatility kick up, and the market grid is very adaptive to the volatility. So all you're seeing is that pick up, but you start to look at these numbers, all of a sudden R2, R3, 4142, that's getting a little stretched here. So I would look for R2, 4119. We did print yesterday on that spike after the Apple release up to 4111. If I go back to yesterday, you see 4111 exactly was the high. I think we probably trade above that. I don't know if there's going to be able to get any traction, but above that, as always, R2, 4119. Next number would be 4142, and that would be kind of a crazy number. But we're seeing the PPM on PPM2 starting to get good solid traction, which tells us we should go on. So let's just set up the week and the end of the month here real quick. So we're setting here right now the 21-week moving average, 4117. I want you to look at the PPMs. I've been talking about this. This is weekly S&P futures. Look at the PPMs. They're all turning up. And this is the minimum that expecting high target 4176. So that's your next stop. We just look at the daily market grid. That's within striking zone today for Friday. I don't expect that, but that is there. So we're looking at 4176, next level 4382. I've talked about this a lot. I think we're heading for somewhere between 4320 and 4380. That is the at least initial target, moving up to the 40-period moving average, which is right now at 4324, the 200-day. All of that stuff comes into play as we get up to that level. But we're definitely got some serious traction going here. And I won't bring it up, but I was looking at the triple leverage, the TQs, and they've got a pattern there on a weekly chart that is incredibly bullish. So, you know, that these markets are going to go up a lot more than anything. So, you know, and anybody that's watched this channel for any period of time, I was just talking about those intermediate trades I talked about in a database. We're going to hold those for 220 days on average. So we're talking about, those are market days. So that's minimum of a year. We've had trades where we've held them 500 and 600 days. So when you get outside of just looking at an analysis that we're doing here on the technical, this is just setting up what's going on in the background. The models, and the reason why I review that, it's who we really are. We actually, through our software, managing billions of dollars. This is not some channel guy drawing trend lines on an S&P chart, okay? Most of what I'm sharing with you right now is I want this information to our institutional clients, but also to our retail, and for you folks to be able to take a look at what's going on. So this is the potential, and this is why I say it's the beginning here, is we're just seeing the beginnings of this pattern. And when I see PPMs like this, the last time we had anything like this where we're getting the explosive, I don't expect it to be a 2020 move, but there is some strong probabilities for us to move up to the 4320 level. So just know that what we're really talking about here is the evolution of the trend. When I tell you can only look out 2 or 3 months, that's all you can. You know, ask Kathy Wood. She'll tell you, maybe, if she was being honest. So the whole idea of looking out 5 years is BS, always has been. But what you can do is get these patterns, and then I will go through more of this since the end of the month. I'm just going to bring this up. We did this yesterday in the live stream, but this is the monthly chart. The monthly chart is just now coming up into this resistance. 4181, 4177 was the Fibonacci target. So we're looking at probably trading up to that level. I think that will be our first resistance point, or therefore the first point where we'll see some hesitation somewhere between 4177 and 4220. And the monthly chart is going to close as of Friday's closing, and we're going to get a new bar. You're already seeing the PPM starting to accelerate on the upside. The downside numbers, I was talking about this on the live stream. We were minus 60. We're only minus 42 on PPM1 now. This is monthly chart. So we're definitely getting some traction here, but the downside is everything's going to target up to that 43. If you didn't see the live stream yesterday, go back and watch that for a deep dive on the indexes. So I'll just stay with the monthly while we're there. It's interesting because on the Nasdaq, the 21-month moving average is starting to turn up again. It's actually still positive, 0.64. This is monthly long-term. So everything suggests that we're going to head back toward 14,100. That's another move from where we are now. This is a pretty substantial move in the markets. So let's come back down to earth. Let's take a look at the dailies just to set up that pattern. That pattern suggests that you can say just already on market grid for today, we're trading 12,913. We're looking at R2, 12,947. So look for R2. All of these markets, I believe, are setting up for, and I don't even think we see an S1, but R1, R2 is going to be the target for the S&P. This is for daily and coming into Friday. And the next level you can see from 947 is the 13,000 handle, and that's 13,058. Maybe because of what we saw out of Apple and Amazon, maybe the markets get really amped up on the tech stocks and everything else. When we cover the interest rates here in a minute, we're talking about a 268 handle on the 10-year. So yields are going down. They're not going up. They're going up on the front end. I did a bunch of yield curve stuff. I did it, I believe, yesterday live stream. 2 nights ago, I did some. So go back and look at the interest rate segments on the last couple of videos if you want to understand what my expectations are for the yield curve and for yields in general. But they are not going up on the back end because what we're seeing is complete demand destruction happening, and that's also reflecting in the action and the configuration of the crude oil chart. So the economy is starting to show its true signs, which is basically starting to collapse, especially on this. And I'll just bring this up for a minute. Is my brother is in commercial lending. He told me today that there is zero. Nobody's doing anything in the commercial side. So when the commercial side stops, these are big transactions. I mean, a small commercial transaction, half a billion. You're looking at billions of dollars. Nothing. It's frozen. Nothing is happening. And if you don't think everything's not stalling right now in the economy, that is the sign of what's going on. So let's go back and get into these, the daily chart. The weekly charts on the Nasdaq. So here's the weekly. you see the incredible acceleration, 0.87 on ppm1. Still got a little negative number here, 0.35. I think when we get the update on Sunday night, we're going to see further acceleration here. We're likely to get through that level. The Fibonacci targets here are interesting as well. High target 113,394. So we got 400 points to that minimum target. Next target is 14,280 and 14,8. So we're all of a sudden we're trading up here at the 40 period moving average. And I know I hate to keep beating this thing to death, but the bottom line is that the market configurations, they're all pointing to going at least to these 40-week moving average, the 200-day, etc. There is tons of them. And whether we can get beyond those points, that's what we'll be talking about 4 or 6 weeks from now. But for right now, what we look at, everything looks like it's heading to that point. So that setup is very solid. All right, we'll try to get rolling a little quicker here. There's just a lot talking about at the end of the month. We're in the Russel here. It's up 0.21. This is the weekly. What was interesting, and I have the weekly models up here. We actually got a model buy at 1808 on Monday. So for this week, we got a model buy from that level on Monday. So this is pretty substantial. And if I were to go into the stats on this, once again, these weekly buys, they're 2 to 250 buys, days of holding before we go. You can go back over here. We got a buy in July of 2020. If you folks have been hanging around me since 2020, I remember in July of 2020, I told everybody I've got major buy signals. We had huge rotation in our database, and all of you folks, just like right now, are telling me, no, I'm wrong. We weren't wrong, and the models were right again. And I've been doing this for a long time, and these models have been running actually since 1996. 92 is the models themselves, but running the database on a large database sampling like I do, it's been around for a while. So when these things happen, they're typically significant. And even going into 2020, by the way, in January of 2020 and early February, we were selling all kinds of stuff. We weren't buying. And even on a model buy, we got to sell on 3.6 before this big decline. Let's see. Yeah, I'm sorry. Yeah. So we had sell signals coming in early in the year, and then as the market dropped down, it just we were short. We didn't get a buy, so we got out and then back in, and this is where this came in. But this is the thing, and this is my point here, folks. This is the RTY on the futures. This is my point, is we're getting it. If we get this rotation in the database, and I don't see how we don't at this point. I've been watching this database for, decades, and I know the ebbs and flows pretty well. There's no one that knows it better than I. And the point is that once we start to get this traction, if we get beyond a certain point, we get above 42% on intermediate, the destiny is baked in. And you could hear right here on this channel, you could hear me talking about all-time new highs. Why would it happen? I don't know. I don't think that's going to be what happens. I think we finish out this quarter. I think everything based on the S&P 43, somewhere between 4,300, 4,400 is the end of this thing. And then we'll find out whether there's a complete failure or not. We'll be able to evaluate it at that point in time. And so let's take a quick look at the daily here. So daily configuration looks like everything else. We got ppm1 turning down, but it's at a plus 0.73, 0.45 on ppm2, and ppm3 is just starting to participate, but that's very usual that it's going to do this. But every chart I could show you, I did this yesterday in the live stream, is everything is pointing to these higher prices that we're seeing right now. And before I get off the indexes here, let me show you something here right now. What we're getting, we're starting to get some targets. Yesterday intraday, it seemed completely ridiculous. This is S&P I got up here right now, but it seemed completely ridiculous. We were getting targets when the market was trading down here in the 74 handle. We were getting upward targets on a 5-minute chart of 40, 45, 4106, and then we had numbers at 41 right here with 4110. Well, on this little spike, we went right to these numbers. It seemed completely ridiculous. This was after the close, and then we backed off after hitting those numbers. Right now, we don't have any new objectives in here at the moment, but there is, if I look up here, this is off the indicators, the Wavetech indicators, there is a pattern that's set up here that is suggesting 4130, 4149, 4160. I don't see that, the numbers I just put out, but this is, it's interesting that even on these short-term charts, we're starting to get patterns that are suggesting higher prices. And just looking over here, the 4105 is a target right now on a short-term basis. So watch those numbers. We're going to move on beyond the indices here, but everything is worst case R1. I don't see, I'm sorry, S1 being printed. R2 is most likely target for everything at the moment, okay? All right, so let's go to the 10-year. We'll cover the interest rates next. I talked about these downward Fibonacci targets, 2.59, we're 2.68. And, this just seems really ridiculous sometimes. And the math ends up working. If we look at the PPMs, we're minus 0.96 on a daily 10-year. I mean, this is a major bull market on a short-term basis, or bull market in bonds. Otherwise, rates are dropping here. Minus 0.85 on ppm2, and ppm3 is minus 1.3. But these targets, I don't think they're realistic that we're going to see 2.4, 2.5 on this. But we have targets down there, and the 200-day is 2.27. And if you watch that review that I did the other night on my expectations of the yield curve, that's a possibility. Now, one of the things that we saw yesterday, I normally don't cover this, but what we saw yesterday is that this is the 30-year. It's at 303, 304. It actually upticked. So if I were to draw in what happened with the yield curve yesterday, the very, very back end, the 30-year actually was some selling going on, most of that buying coming in on the 10s. Go over to the yield curve spreads here. Look at these pairs for a minute. We're just seeing, look at this. This is steepening. Yield curve just straight up. So we saw, I'm going to go back to this other page. I'll show you some values here. And so the 13-week, don't have the numbers here, but the 13-week T-bills were down, I think at one stage down 3 or 4%. The 10-year was only down 1.2. I'm making these numbers up off of memory, but the ratios were big. That's why you see this yield curve going back over there. That's why you see these charts are just vertical. And so typically what you'll get, I still think that we're going to see this front end of the market, and the scenario that I've been talking about for a while is that we're going to see the back end of the yield curve down, the front end up. I don't know if the Fed has the conviction to push us up. This week's increase put us at basically 225 to 250 is their target range for Fed funds. They really need to be 354 minimum. I don't see anything other than that. We need to be at those levels. It's going to take them September before we're going to get there, and we'll have to see exactly what's going on from that standpoint when we get down that trail. But I think the yield curve will continue to invert across the board, and I think that has everything to do with what I just talked about, is that back end demand destruction that's happening in the economy. So let's look at crude oil. Crude oil is stabilized, but this is kind of a broken record. But we're looking at 95 to 103. Laid that out pretty good. PPMs are trying to turn up, so we're starting to get some support coming in here. It just, I can't remember. I mean, we can go way back when the market declined over here. We went down to 84, but ever since this, I've been talking about this 95, 105 kind of $10 range. That's still in play here. We actually have upward targets on the fib targets, 100, 104, 107 still in the books. That's these red and yellow dots above the market. So everything still points to 95, 104. Nothing's changed here. We probably lost everything that we're going to lose as far as the demand on oil. There's still shortages, the disruption with the Russian oil that's not flowing around the Western world, although it kind of is, because I think Biden made a deal that with Saudi Arabia to buy their production, but Saudi Arabia is buying oil from Russia, which is really interesting. But we don't want to do any business with those guys. Anyway, so the point is that the world, this is a stable market here. There's not a lot going on. I think both of these markets have reflected this scenario that I'm talking about here. We're just not getting, there's no I guess, increase in demand, but we are seeing, like I said, PPMs are trying to turn up. This is nothing material. If we come over here and go to the weekly, you'll see something completely different. You got PPM 1 minus 0.78, minus 0.42. So there's a lot of resistance overhead in those ranges that I was talking about, 100 to 104. That's the 10-week moving average, 21-week moving average. And then we're looking here at the 40 being major, which is 86.41. You saw anything 80. If you're a crude oil trader, you want to buy anything that's got an 8 in front of it. So if it's 88, 84, 86, that's just a bargain. And as far as this market goes. All right, so let's look at gold. How impressive was the rally? We're up a little bit right now, 1770. This is a weekly gold chart that I have up here. I talked about us getting over 1755.60. Here we are. And all of a sudden, this looks pretty good. There's still a lot of downward pressure. PPM 1 is at a minus 0.52. So a major resistance point right there at that level, which is 1815. I talked about maybe getting somewhere around 1780, 1800. And I know I saw a funny comment in the channel about me saying that gold and Bitcoin are both kind of defying gravity. But if I go over the daily, we actually got a buy signal on the reopen tonight, and that came in at 1773. That was at the open. 1773.1 was the open. That's where we got a buy signal. PPMs are all looking pretty good, up 0.29 PPM1. So there's some hope. There's still resistance up here at this 1800, 1880, 1800, 1820 would be a big deal. There is a pivot at 1825, a trade above 1825. We actually get a rally back to the 200. I'll just continue to follow this. I don't know that that's going to happen, but we did get a buy signal, and that is pretty relevant, I think. Final market to cover tonight is Bitcoin. This is a weekly Bitcoin. The PPMs are trying to turn up. They're still negative 2.62 on PPM1, 2.09 PPM2, PPM3 minus 2.39. So all negative numbers. That resistance number 23,475. We're trading. Let me bring this bigger pop up on so you can see this. 23,475 is the 10, so we're trading above that. If we can maintain that, this chart doesn't close out till Sunday night. So if we can stay above that, I talked about this, all of a sudden we're looking at a move to 28 to 31 on Bitcoin. And if the correlation is going to be what everybody has promoted, that it's like the Nasdaq, then we're going to see some further traction come in. Let's take a look at the daily. It's pretty narrow ranges that we've been printing, but we've been able to get the PPMs to get in a positive mode, in trend mode, 1.15 PPM1, 0.79, and so we're seeing us trade into these projections here. High target 2 is 24,153, and target 3 is 25,056 on the daily. There's resistance, like I said, around the 24.3 on the weekly. But look at the PPMs here. They're really starting to turn. And the range that we've been in, let me blow this up so you can see this a bit. We've been range bound going all the way back here to the beginning of mid-June. And now we're starting to see some print up. The 10-period moving average, 22,475. This is still a positive mode. It's fairly impressive. Like I said, I think as we come into maybe next week, we start to see on Sunday night, we'll start to get closer to see if we can hang in there over the long, between Friday and Sunday night. We can see what that looks like. But if we hang on, we could get a weekly buy here, and this will go hand in hand with everything that I've been talking about with the indexes, because this is a risk-on asset. Okay, folks, this is going to do it. Looks like we have a spirited chat line going tonight. Appreciate everybody going, being able to have a conversation while I'm talking. Appreciate everyone being part of this channel. This is the final video for the month for everything. And as I've been telling you, we're getting into, after this coming week, there's going to be some disruption with the channel. I'm going to be traveling. So I will try to come up with some sort of scenario that how the channel will be going on for a little bit here. So, yeah, I love that there's so much resistance on this call about being bullish here. So I was told, beginning of the month, the market was going down and everything was happening. So anyway, folks, that's going to do it for the night. And I will see you on Sunday night. Good luck trading. And profitable trading for Friday. So go ahead and hit that like button, subscribe if you haven't already done that. You guys haven't been doing a good job lately. We're under 1,000 likes, so you got to get it up there. So there should be a like for every, if you watch this, hit the like button. If you stayed this long, do it on the replay. Anyway, folks, have a great Friday. We'll see you on Sunday night.